Brian Van Driel, National Marketing Director with Premier. And with me today I have Dennis Rackers, National Sales Director. Say hi to everyone, Dennis.
Hey everybody, thanks for being on the webinar with us.
Great. Today we are going to present on 5 annuity sales ideas that work, and it's just a continuation of something that Premier wanted to do at the beginning of the year and get more into sales ideas and less webinars on product, giving you some real value each time you attend one of our webinars. And we've really seen the difference in our webinar attendee numbers, and this is no different. We've got a lot of people on the call, so we appreciate you attending. But let's get it started. We don't want to waste anyone's time here. Let's start off with the sales idea number 1. And sales idea number 1 is basically CD versus annuities. And I want to set the marketplace out there right now. According to the FDIC, there are $11 trillion on deposit in banks today, and according to the Investment Company Institute, there's $2.4 trillion in money market accounts. And with the average 5-year CD rate at 1.23%, and that's an after-tax rate of 0.92%, assuming that 25% tax bracket, and money markets yielding just 0.46% and an after-tax equivalent of 0.35%, assuming that same 25% tax bracket, there's definitely a lot of opportunity out there to talk about CDs versus annuities. And besides the traditional advantages of annuities versus CDs, you know, the tax advantages of avoiding probate and lifetime income, in fact, the only product that can provide lifetime income you can't outlive. When it comes down to the CD versus annuities, a lot of times clients are just going to look at the rate. And let's talk about what our rates are right now. Annuity rates are hot right now. We've got 3-year rates paying as high as 2.1%. We've got 5-year rates paying as high as 2.85, with a 7-year rate as high as 3.2. If you consider our 5-year rate is more than double what that CD rate is, and our 3-year rate is more than 4.5 times higher than money markets. So when you get right down to the rates, we're very, very strong. You know, talking to some of the annuity producers out there that are selling a lot of MYGAs right now, you know, they're telling me, you know, you don't try to put a square peg in a round hole. Many of the CD type clients, you know, a better proposition for them may be that multi-year guarantee annuity, where it is, you know, very similar to what they get with a CD. And remember, you want to just get the client as your client, so you have an opportunity for multiple sales within other product lines, as well as multiple sales for different types of money they may have down the line. Dennis, do you have anything to add?
You know, the only thing I would say, Brian, that's excellent. You know, obviously interest rates have been ticking up here lately. The 10-year Treasury has come up around 2.5 now. That's why we're seeing the increase in interest rates on the annuity products. And, you know, we have agents all the time ask us, you know, how can I generate more interest? How can I find more prospects? This is a real simple way to do it. Just like you said, you know, you're comparing rates here. And usually we're blowing the CD rates out of the water. So it's kind of a no-brainer. It's a great way to at least, you know, get people to contact you and get new prospects in the door.
Yeah, we've got agents that simply put in an ad with some of these rates out there, and they're getting phone calls. So, you know, if you're looking for some sample ads, call one of our annuity marketers after the call. We can get you hooked up with an ad to help you put some advertising out there. Let's take a look at sales idea number 2. And I like to call this the split annuity concept new style, because when you typically think of the split annuity concept, you go into the thought of the 2 buckets, one where you take income, the other one where it's supposed to grow and get you back up to your initial premium while you're taking income. But with CD rates at 1.2% and our annuity rates, once again, more than double what that 5-year CD rate is, we've got an option to take half of the client's money and put into a multi-year guarantee annuity. And what that really is going to do is we're going to give them the same earnings potential as they got if you put 100% of the money into that CD rate. but we're only using half the money to get the same type of earning, and we can take the other half and put it in an index annuity with some upside potential. So let's take a look at a hypothetical example. And what we did in this example is we had a 65-year-old that had $500,000. We put $250,000 in that multi-year guarantee that we showed earlier that was earning 2.85%. We took the other $250,000, we put it in a 5-year index annuity. We've got some great upside potential in this specific 5-year annuity. It's got a 4.7% cap, which is pretty amazing considering the cap rate environment today. So if you just look at this hypothetical example, after 5 years, that 250 grew to just over 300,000, and I did the math for you on the 250 that was in that the MYGA that was earning 2.85%. That grew to just over 287,000. So if you combine that, that's just over $587,000. Whereas if you put all 100% of that 500,000 in a 1.23% CD, you're sitting just over $531,000 after 5 years. So there's definitely an upside potential there, and it gives your clients some other options to take a look at. You know, another thing to even mention, if you want some higher upside potential, you can look at that 7-year MYGA that was paying 3.2%. I know we've got some index annuities where the caps are as high as 5.9%. So that's pretty amazing, 5.95% on an annual point-to-point. That's an annual point-to-point, and if you're not aware of that product, give an annuity marketer a call after the webinar today. Do you have anything to add, Dennis?
The only thing, again, excuse me, and I apologize, by the way, for my voice. I'm kind of fighting a cold, as you can probably all tell. But the only thing I would add there is, that's a perfect continuation, from the first idea you had up there, Brian. Just comparing the interest rates between CDs and annuities. Obviously you have somebody that likes the interest rate on the annuity and sits down and talks with you about that. It'd be a pretty easy conversation to take them into this split conversation. Say, hey, yeah, obviously this is really great. Let me show you something else you might really like. And you're creating a great opportunity for them here, adding a lot of value. And I think that'd be a great way to pick up some extra sales for you and generate some happy clients.
Absolutely. Let's jump right into sales idea number 3. And the sales idea number 3 involves an index annuity with liquidity. And generally, one of the common objections when you're talking index annuities is tying up your money for so long. That's what a client is telling the agents. So would you have clients that would be interested in a 5% premium bonus on their money, a 2% minimum guarantee on their money, the availability to walk away after 2 years if life happens? We've got liquidity inside the product up to 50%. And an upside potential of 4% no matter what. I think you have some clients out there that'd be interested in that story. Also, a tough place to find product for is those clients 81 to 85. If you're looking for product in that age range, this product does fit that age range. But let's take a look at a hypothetical example here with this product and show you what you can show a client. And this is the actual illustration. That's client approved. We've got $100,000 showing up in the upper left-hand corner, the premium bonus of 5%. And then I took a little red circle and an arrow there on the right-hand corner towards the middle of the page, and I circled that guaranteed minimum surrender value. After year 2, we've got a guaranteed minimum surrender value of $101,359. That's unbelievable. After 2 years, you can walk away with the contract with more money than you put in. And what that does is gives your client a sense of security, or knowing that they can access their money in a relatively short period of time inside this annuity. But also for you, with rates where they're at, it gives you an opportunity to go back to that client and feel good about going back to the client and showing something new and that potentially could give them some better benefit, more better benefit. Do you have anything to add, Dennis?
Yeah, absolutely. You know, this is one of my favorite index annuities on the market, actually. You know, you have no product. It's very, very difficult out there today to find anything that offers this kind of liquidity and this kind of guarantee. You know, that 2% guarantee on 100% of your premium is just unheard of these days. You know, the cap on the product, which is currently at 4%, that's also the guaranteed minimum cap. You know, so it cannot, you know, I know a lot of times you see products out there that have strong caps in the first year, but the reason is because the company plans to renew that at, you know, like 1% or something in the second year, and then you're in a 10-year, 15-year surrender. So, you know, your client really isn't getting any advantage. With this product, you got a 4% cap that's never going to go below 4. It can only go up with the 2% guarantee, and then, you know, there's nothing more powerful than what we're seeing on the screen right now. You know, I know that most of you, if you're in the annuity business, probably all of you that are in the annuity business, when you talk to people, their primary concern, you know, as you know, I always say, my primary concern is return of my principal rather than return on my principal. So you can show them that they can walk away from this thing, even if all it does is the guaranteed minimum. You can walk away from it after 2 years with more money than you started with. Pretty powerful story there, and you know, it gives them just kind of a nice, simple product with some good upside. And the fact that you can issue it up through age 85, you know, it's very difficult anymore to find annuities that'll issue over age 80. So a lot of them have dropped down to 75 even. And you know, this one you can issue up to their 86th birthday. If you have clients, you know, in that 75 to 85 or 80 to 85 age bracket, I would strongly encourage you to get in touch with one of our marketers and learn more about this product, because it's just really a no-brainer sale for clients in that age group. You know, they usually have the money sitting in the bank not earning anything. And, you know, here they can actually get some return and still have the liquidity that they want.
That's excellent. That's excellent, Dennis. Let's take a look at sales idea number 4. And I like to call this have your cake and eat it too. And, you know, if you've got clients that are concerned about taking income, whether that be income that they don't need or income that they need, or are looking for supplemental income, what if you could show them a way to take that income and, worst case scenario, still leave the initial premium to the spouse? You think that would be something you would have clients that would be interested in hearing more about? Let's show you how that works. We've got an example here of a 65-year-old with $100,000, and in that column, first column, we're going to show you the years that we're taking the income, and we'll drop all the way down to the bottom row. If we went out 20 years and took RMDs on a 0% rate of return, this is a hypothetical assuming 0% rate of return, we took a cumulative RMD total of $56,320. Now, if we go to the death benefit columns, you see there's a lump sum option and there's a 5-year option. If you took a lump sum death benefit to the spouse after 20 years, you've got $90,895. So they took $56,000 in income over the 20 years, assuming a 0% rate of return, and at the event of death of the owner, the beneficiary is going to receive $90,895. That's a $46,000 benefit on a 0% rate of return if you're taking that lump sum. Now, if you wanted to take a 5-year payout, that dollar amount is going to be $125,000, and that's an $81,000 benefit, once again on a 0% rate of return. I don't know about you, but if I could sell off a 0% rate of return, that would make me feel real comfortable about not being embarrassed by the product that I sold. You have any thoughts there, Dennis?
Yeah, you know, actually, Brian, this is one of the most powerful sales concepts, I think, in the industry. I personally know of many, many, many agents who have used this type of concept with various products and have generated hundreds of millions of dollars of annuity premium just because of this. When you can actually sit down in front of a client and show them that they can spend their money, not earn any interest, and still have the beneficiary get all of the money back. It's kind of hard, to not want to do that with at least a portion of your assets. Everyone is concerned about what if I need the money, what if an emergency arise, or, obviously when they have qualified money, the government forces them to take required minimum distributions. Those of you who do a lot of annuity business, you know that how rare is it that your client really wants to take RMDs. Usually that's money they've socked away that they're not planning on spending. The last thing they want to do is take distributions and have to pay taxes on those distributions. Number one, they have to pay the tax. Number two, they're depleting the value of the account, so there's less money to go to the beneficiary. Here you can show them, hey, you're going to have to take at least your required minimum distribution. You can't get around that. However, if you have your money in this concept, you can take those distributions and still leave, as much, maybe more, to your beneficiary, even if you don't earn any interest. So a very, very strong sales concept. Again, if you're, hopefully everybody on the call is in the annuity business, at least to some degree. If you are, you have clients that have qualified money, IRAs, 401ks, that kind of thing. Again, I would get on the phone right away, talk to one of our marketers and learn about how this concept works, because it will make you more money and, again, give you a lot of happy clients.
Dennis, one thing I just thought of is building off that CD story, I'm sure there's agents on the phone with clients that have CD IRAs, that they're taking income off those CDs. This is a great opportunity to talk to them about taking income and probably increasing their income because of the current rate environment, and still leaving that initial premium as a death benefit worst case scenario.
Yeah, excellent point there. That's right. How would you like to actually increase the money that you're taking out, to spend, and increase the money that you leave behind? It's kind of hard to say no to that, I would think.
I'd have a tough time saying no to that, Dennis.
How's that Capital One commercial go? Who doesn't want more money? It's like, basically it's more money. Why wouldn't you want it? So, it's a very powerful sales concept, no question.
All right, we're going to jump into sales idea number 5, and we're calling this the annuity alternative. And what if you've had your clients had the bank call them and say that we've got a new CD with the following benefits. Now, there's a lot of benefits there. I'm just going to touch on a couple of them. A 10% bonus, a guaranteed return of premium, minimum interest rate of 2%, income tax-free payout to the beneficiaries at death, and monthly payout in the event of chronic illness. How fast do you suppose those clients would get to the bank? I'm guessing pretty fast, because those are some pretty unbelievable benefits. Right, Dennis?
Yeah, it is, and this I love this product and this concept as well. It generates a ton of interest. Again, what we're trying to show you here today, we talk about sales ideas. We want to try to show you things that can get attention, get more prospects to contact you and say, hey, I need to learn more about this. I'm telling you, there's not too many things that will do that for you better than this. Obviously we all know there's only 3 things that can happen to us. We're going to live, we're going to die, or, at some point we're going to need some kind of care. This type of thing, multiplies your money to be available in any of those scenarios. And there's not too many ways that you can do that.
Yeah, and I saw a stat here recently. LIMRA says it's somewhere between 80–85% of the annuities aren't used for income. So wouldn't it be a great opportunity for you to go back to those clients, 80–85% of your clients that aren't going to be using that money for income? Initially they bought it thinking they'd take income at some point, and the reason they bought it is annuities are great wealth accumulation, wealth distribution vehicles, but they're not great vehicles for wealth transfer. And if you look at this hypothetical example I just put up on the screen, we're showing a 65-year-old female with $100,000, and we're buying a death benefit. This is a single premium simplified issue product, so relatively easy underwriting, but we're buying $186,000 in death benefit, so we're leveraging that $100,000 into $186,000. We're creating more and better benefits, and we're giving them 100% return of premium at any time, and we are going to give them access to that $186,000 in the event of a chronic illness.
That's, that's just, I'm sorry, Brian, that's just fantastic, set of benefits there that the client gets for money that they have sitting in the bank right now doing, almost nothing. Just by repositioning a small portion of their total assets, they can generate a whole lot more for themselves, regardless of what their situation, might be in the future.
Absolutely, and if we can create more and better benefits for the client and create additional sales for ourselves, everyone wins.
That's correct.
All right, well, that is the wrap-up of sales idea number 5. A couple of things me and Dennis just wanted to touch on going on here at Premier. Call about our loyalty rewards program. We're getting a tremendous amount of good response on that. One of the most aggressive agent incentive programs out there. It's an uncapped program. If you want more details, call a marketer after the webinar today. And I think Dennis wanted to talk on one of our marketing programs.
Yeah, we probably, a lot of you have probably seen a lot of marketing companies are talking about Social Security now. Being able to advise your clients on Social Security benefits and payouts is becoming a big deal. As baby boomers are aging, there's a lot of questions, that are coming up on how do I maximize my Social Security benefit, when's the best time to start it, all those types of things. And as an advisor, as a financial advisor, you want to be able to answer those questions. We have a program that is, I just believe, by far the best overall program on the market for Social Security planning. It's called Savvy Social Security for Boomers. It's a fantastic program. It's very, very comprehensive. You can incorporate it if you're doing seminars now to generate prospects and new clients. It can be very easily incorporated into an existing seminar. You can do it as a standalone seminar program. You can, it doesn't have to be a seminar at all. There's a lot of different ways you can use it. You have access to the CPA who created it to ask questions and that type of thing. Just really a tremendous program. And that, too, if it's something you want to get more information on, any of our marketers can tell you about that. It does, obviously there's, it's not a free program to us, so, we do ask that you become active with us and place a little business with us, but it's not a ton, and it's easy to do. And I can tell you that this program will make you money many, many times over. So, we provide it obviously to you at no cost if you just do a little bit of business with us. It's the best Social Security program on the market. So if you're interested in that, call the 800 number you see on the screen and make sure you get some information on that Social Security program.
Yeah, and I believe, Dennis, if you call in today, we'll let you lock in that offer. I believe we're saying $100,000 in annuity premium. We'll give you that Savvy Social Security program for free. That's about a $1,000 value, just around. So, right. I mean, you don't have to have business today, but you need to call in to at least lock in the offer. We'll put you down as somebody that called in and has that offer extended to them. So another reason to call in, talk to our annuity marketers today. And between our 3 national sales managers in our annuity department, we've got over 50 years of experience in the insurance industry, so we can certainly help you in any case that may arise in your annuity business.
Fantastic. Yep, absolutely right, Brian. And we look forward to hopefully hearing from all of you today, and hopefully you've seen something in the webinar here that has sparked some interest. If you're in the annuity business at all, I think we've got some ways that we can help you increase your business right away. So give us a call, and look forward to hearing from you and working with you.
Yeah, that number is 800-365-8208. Once again, 800-365-8208. I want to thank everyone for their time today, and you guys have a great day.
Thanks a lot, everybody.
Thank you.